Hello, and welcome to our webinar on taking an in-depth look at the Streamlined Filing Compliance Procedures. We actually had this webinar not too long ago, but I thought we'd go ahead and go through it one more time because there's been an announcement by the IRS that I'll go over a little bit later in the webinar that could impact how long these amnesty programs are around, and so we thought it was relevant to go through them one more time. So I thought I'd change it up a little bit and change our normal webinar intro slide to something a little more livelier. The IRS, we have what it takes to take what you have. Put a little humor into an otherwise dull subject. So jumping right in, as always, a little CYA. This disclaimer just says that this presentation was prepared for education purposes only. This presentation is not legal or tax advice, nor is it to be construed as such. Each individual circumstances are different. You should seek legal and or tax advice to address any specific questions you may have. A little bit about myself. For those of you who have not attended an Esquire Group webinar before, my name is Jimmy Sexton. I have my education. I have a bachelor's in business administration, a Juris Doctor, an LLM in international taxation. I'm the president of Esquire Group. We're an international tax advisory firm with offices in Austria, Germany, the United Arab Emirates, and the United States. We specialize in strategic consulting and international taxation, including U.S. citizens with foreign income or assets, expatriation, family offices, succession planning, structures for high net worth individuals, and corporate structures for SMEs. I'm fluent in English and German. If you guys want to know more about me, feel free to check out my bio on our website. So jumping into the presentation, the first thing we want to talk about just briefly is who the U.S. tax laws apply to, and then we're going to talk a little bit about what those tax laws are that you have to comply with as it relates to foreign income or assets, and then we'll talk a little bit about some of the options available for getting back into compliance in the event that you have not been in compliance. So the U.S. tax laws apply to U.S. citizens. They also apply to permanent residents or green card holders, and those individuals meeting the substantial presence test. The substantial presence test is essentially a test that if you meet it as a foreign national, you can become U.S. tax resident simply by spending too much time in the United States. And the way this calculation works is not straightforward, as with most things that involve the IRS. So if we wanted to figure out, for example, if somebody met the substantial presence test in 2017, we would count up all the days in the current year. If those days equal more than 31 days, then we would count all the days in the current year, a third of the days from 2016, and a sixth of the days from 2015. If that number equals 183 or more, then congratulations, you've met the substantial presence test, and you essentially have to comply with the U.S. tax laws just like U.S. citizens and permanent residents. There are some exceptions if you meet the substantial presence test, but we did another webinar on that. You can find it on our YouTube channel. So, assuming that you're a U.S. tax resident, meaning a U.S. citizen, permanent resident, or someone meeting the substantial presence test, you have to file U.S. income tax returns and report your worldwide income. So that means, just like the name implies, your income from all over the world. It means your interest income, your wages, your self-employment income, your dividend income, all your income has to be reported in the United States. The other thing is you have a requirement to file a foreign report of foreign bank and financial accounts, FBAR for short. If you have foreign financial accounts that have an aggregate value of $10,000 or more. So foreign bank and financial accounts is a pretty broad definition. That's basically all your foreign bank accounts, brokerage accounts, annuities, life insurance with cash value, pretty much any type of foreign account would be included in the definition of a foreign bank or financial account. The aggregate value of those accounts is $10,000 or more, then you have to file this FBAR. So short example I like to give, if you have $5,000 in one foreign account, $6,000 in another foreign account, each account is under $10,000, but combined it's $11,000, which is more than $10,000. Both accounts would need to be disclosed. You also have to have an obligation to file international information returns. Some international information returns are filed separate from your income tax return. Some international information returns are reported with your income tax return. And there's a bunch of different forms for all kinds of different entities. For example, if you have foreign financial assets, meaning stocks, bonds, foreign bank accounts, things like that, which exceed a certain threshold, then you have to file Form 8938 with your tax return to report those foreign financial assets. If you own, generally speaking, 10% or more of a foreign corporation, you may have to file a Form 5471. If you have ownership in a foreign partnership, you may have to file Form 8865. If you have ownership in a foreign disregarded entity, are normally like foreign LLCs that have elected to be taxed as disregarded entities, and you have to file an 8858. If you have foreign trust, probably you most likely have to file Forms 3520 and 3520A. If you have passive foreign investment companies, which are generally foreign mutual funds, and it doesn't matter if those foreign mutual funds or ETFs are owned through a foreign brokerage account or a U.S. brokerage account, they generally trigger a filing requirement of Form 8621. So what if you haven't been complying with these tax obligations? What if you haven't been filing U.S. tax returns? Or what if you haven't been filing an FBAR or your international information returns? What if you have filed, but you realize that you made a mistake? For example, you forgot to report your PFIX and file Form 8621. Are you going to be subject to a penalty? Are you going to be charged with a crime? Well, the very first thing you should do is panic. That's very, very important. Panic, then bury your head in the sand and ignore the problem for a little while. Then you can always try to hide your assets from the IRS and hope that you don't get caught by the IRS. And then this is very important. Once you come to grips with the fact that you have to come clean and get into compliance with the IRS, hire the cheapest possible person to advise you, because they're absolutely going to be the best and just do a wonderful job for you and make sure that you don't get in more trouble than you're already in. And then there's all ways you can renounce your citizenship and just leave the United States and hope that the IRS doesn't chase you out. Obviously, I'm kidding. Don't do any of the above. These are examples of exactly what not to do, but they're examples of what a lot of people do and then wind up getting themselves in a lot more trouble than they were in before. So here's the real list of what you should do if you are not in compliance with the U.S. tax laws. First and foremost, hire an expert to advise you, and make sure that the expert is a U.S. international tax expert. I can't tell you how many times people go to a foreign lawyer or a foreign accountant looking for U.S. tax advice and are then surprised that they didn't get good advice. The person obviously isn't educated in U.S. tax law. Obviously, they're going to give bad advice. Likewise, there's a lot of U.S. tax people that are just not specialized in international taxation. It's very much like doctors. You have your general practitioners that do an okay job if you have a common cold or something like that. But if you really have an issue with your knee, for example, you need an orthopedist. You need a specialist. And the same goes with international taxation. It is a very complex area of U.S. taxation. The penalties for non-compliance are extremely high, and you need to find somebody that really specializes in this niche area. Thirdly, be honest with the expert. Disclose everything. I can't tell you how many times, clients try to hide the ball, and at the end of the day, they wind up in a worse position than they would have been had they been honest with the expert and allowed him to advise them properly. Fourth, follow the expert's advice. He's an expert for a reason. Do what he says. And then take the necessary actions to get back into compliance. The good news is that if you have not been in compliance with reporting your foreign income or assets, you do have some options, and the tax expert will surely go over those options with you and advise you properly on which option is right for you. So today we're going to be focusing on the second item in this list, the streamlined filing procedures. But depending on what your situation is, there's also other amnesty programs available. For example, the Offshore Voluntary Disclosure Program, the Streamlined Filing Procedures, which we'll be covering today, the Delinquent FBAR Submission Procedure, and the Delinquent International Information Return Submission Procedure. So depending on what your situation is, you'll fall into one of these four categories. The Offshore Voluntary Disclosure Program, or OVDP for short, is generally for people who intentionally didn't comply with U.S. tax laws and potentially have some criminal exposure. The Streamlined Filing Procedures, which we'll be covering today, are for people whose failure to comply was non-willful. The Delinquent FBAR Submission Procedure and the Delinquent International Information Return Submission Procedures are for people who failed to file FBARs or international information returns, and that failure was due to reasonable cause, and there was no unreported income or unpaid tax associated with their failure to comply with FBAR filing requirements, international information return submission procedures, or international information returns. So jumping into the streamlined filing procedures, we're first going to talk about the general eligibility requirements. So first, the streamlined filing procedures are available to individual or estate taxpayers residing outside the U.S. and inside the U.S. The streamlined filing procedures are not available for entities. The taxpayer must certify that the conduct was not willful, and the taxpayer cannot be under civil examination or criminal investigation by the IRS. I want to go back to the second point about certifying that the conduct was non-willful for a second, because this is a very important element to the streamlined filing procedures. So in order to qualify for the streamlined filing procedures, your failure to comply has to have been non-willful. So that basically means you didn't do it on purpose. You got bad advice. Maybe there was some extenuating circumstances. You had a misunderstanding of the law, something of that nature. And then as soon as you found out about that, you took immediate steps to correct those actions. I can't, over the years, I've come across a lot of taxpayers who wanted to qualify for the streamlined filing procedures, but they found out 2 or 3 years before that they maybe had some sort of U.S. filing requirement, but they weren't sure what it was. So they just buried their head in the sand, and now all of a sudden something's happened and they've decided they wanted to get back into compliance. That person's not willful. They were willful. They knew years ago, at least a few years back, that they had some sort of filing requirement. At that point, they had a duty to figure out what that filing requirement was and to get back into compliance. And by not doing so, they lost the argument of being non-willful, and the only thing that they can do is go through the Offshore Voluntary Disclosure Program, which carries a fairly hefty penalty. And when this certification is made to the IRS, you have to include a very detailed narrative explaining why the conduct was non-willful. And it's also very important that you have to include both the facts that are favorable and non-favorable. You don't want to do anything to hide the ball from the IRS, because if you did, they could kick you out of the Streamlined Filing Procedure program, and you would be subject to much higher penalties than you would be under the Streamlined Filing Procedures. Additionally, the certification of non-willfulness has to be signed under penalty of perjury. So if you're not completely honest, then you've perjured yourself, which is potentially criminal. So these are the general eligibility for the Streamlined Filing Procedures. And there are two Streamlined Filing Procedures, one for people residing outside of the United States and one for people residing inside the United States. The first one we're going to talk about is the Streamlined Foreign Offshore Procedure, which is for U.S. taxpayers who are resident outside of the United States. So, in order to qualify for the Streamlined Foreign Offshore Procedure, you have to meet a non-residency requirement. This means no U.S. abode or being physically outside of the U.S. for 330 days in one of the most recent 3 years for which the tax return due date has passed. So in one of the past 3 years for which the tax return due date has passed, so most taxpayers residing abroad don't have to file until June 15th, so we're still just before the due date passing for 2016. The taxpayer would have had to have been outside of the United States for 330 days or more in either 13, 14, or 15. After June 15th, that would then change to 14, 15, and 16. They have to have failed to report income from a foreign financial asset and pay taxes required by a law. So basically, you didn't report foreign income and pay tax on it the way you were supposed to comply with the law. And you may have failed to file an FBAR. Having not filed an FBAR is not a requirement for taking part in the Streamlined Offshore Procedure. Assuming you meet these eligibility requirements, then you would have to file or amend up to 3 years of tax returns. And these are 3 years tax returns for which the due date has already passed. So if you were to file a streamlined procedure now, you would be including 13, 14, and 15 would be the 3 years that need to be filed or amended. You have to file or amend up to 6 years of FBARs. You have to pay any taxes and interest. If you note, however, there is no penalty with the Streamlined Foreign Offshore Procedure, just paying the back tax and interest. And you have to sign the certification of non-willfulness that I discussed earlier under penalty of perjury, explaining why the behavior was non-willful. Assuming that your conduct was non-willful and you do not meet the requirements of the Streamlined Foreign Offshore Procedure, there is the Streamlined Domestic Offshore Procedure, which is for taxpayers, generally taxpayers who are resident in the U.S. or fail to meet the criteria of the Streamlined Foreign Offshore Procedure. And normally the disqualifying criteria is that somebody can't meet the non-residency requirement. So to be eligible for this, you have to not be able to meet the non-residency requirement discussed in the Streamlined Foreign Offshore Procedure. You must have filed a tax return for each of the most recent 3 years. If you were required to file a tax return and you may have failed to file an FBAR. The requirements, again, are very similar to those of the Streamlined Foreign Offshore Procedure. You have to file or amend up to 3 years tax returns, file up to 6 years FBARs, pay any back taxes and interest, sign the certification on willfulness under penalty of perjury. But there is a penalty of 5% that's based on the highest value of the unreported assets. And the way that 5% is calculated, we basically look at the undisclosed assets over the 6-year period and pick the year that had the highest value and then assess 5% of that value as the penalty. That's I think a pretty good summary of the streamlined foreign and streamlined domestic offshore procedures. A couple of noteworthy items that I think are worth mentioning is if you previously filed what's known as a quiet disclosure, you can still be eligible for the streamlined procedure. Quiet disclosures were pretty popular a few years ago, and a quiet disclosure is sort of a term of art. It's not an official IRS amnesty program. A quiet disclosure was basically when taxpayers would go back and amend their returns to correct them for not having reported foreign income or assets properly, and then just kind of hope that the IRS wouldn't come after them rather than taking part in an amnesty program that may have carried a penalty, for example. The IRS is looking at people who filed these so-called quiet disclosures very carefully, because it's not fair that those people went through these quiet disclosures and didn't really pay any penalties when other people were going through these IRS amnesty programs and paying penalties. So having done a quiet disclosure, you're in a somewhat vulnerable position. And so the point of saying this is, even though if you did a quiet disclosure, you can still be eligible for the streamlined procedure and hopefully get yourself some protection from being assessed draconian IRS penalties. In order to file a streamlined procedure, you have to have a valid taxpayer identification number. This is generally your Social Security number. It may seem like sort of an obvious thing, but there's quite a few what we call accidental Americans. These are children that are born generally to Americans abroad, and that maybe a dual national. Let's say, for example, they're born in Austria to an Austrian mother and American father, and they're born with dual citizenship, and they grow up in Austria and live the majority of their lives there. A lot of those people don't have Social Security numbers, so they would need to get a Social Security number in order to take part in the streamlined filing procedures. What is the decision-making criteria when comparing the streamlined procedures versus the offshore voluntary disclosure program? The streamlined procedure carries a fairly low penalty, which makes the streamlined procedure very attractive to taxpayers. The streamlined foreign offshore procedure carries with it no penalty, and the streamlined domestic offshore procedure carries with it a 5% penalty. Both of those streamlined filing procedures only require you to file or amend up to 3 years tax returns and 6 years of FBARs, whereas the offshore voluntary disclosure program requires you to file or amend up to 8 years of tax returns and FBARs, and carries with it a penalty of 27.5% or 50%. But the advantage to the OVDP is that non-willfulness is not a requirement. You could have been willful in your actions and still take part in the OVDP. That's why the penalty is higher. One of the issues that arises quite a bit is, most people want to take advantage of the streamlined procedure because it's a lot less in accounting work, which means lower costs in preparing the tax returns and FBARs and other related documents. And also the penalty is much, much lower. The problem is that a lot of people don't really meet the non-willful requirement, even though they try to frame their facts in the most favorable possible light. And it's not advisable to try to go through the streamlined procedure if you truly were not willful. One of the downsides to the streamlined procedure is you don't get any sort of IRS acknowledgement or acceptance saying, hey, you qualified for the streamlined procedure, we've accepted it, and you're done and you're now compliant. That's one of the things that's kind of nerve-wracking, is you have to submit your streamlined procedure and then basically wait 3 years, which is the normal statute of limitations for audits, to know that you made it through successfully. Whereas with the Offshore Voluntary Disclosure Program, you actually get a closing letter that's signed by the IRS and by the taxpayers saying we've settled this matter, it's done and over. Obviously, it's very important to be completely forthright on the streamlined tax returns and FBARs that are filed, because they can be checked against information that the IRS has received from banks, for example, from FATCA, information that was filed from foreign banks, information from financial advisors and other sources. So it's very important that those are very accurate. Again, the certification of non-willfulness may be reviewed by the IRS. When the streamlined procedures first became popular, the IRS, I think, was not paying so much attention to the certifications, but now the IRS is really scrutinizing the certifications, and it is very important to have them be very thorough, as mentioned earlier, and disclose both the favorable and non-favorable facts, so the IRS can make a decision as to the willfulness. The IRS amnesty programs for undisclosed foreign income and assets could be coming to an end. We don't know. The IRS has made it very clear that these programs for disclosing unreported foreign income or assets could be modified or closed at any time. And I think that people and practitioners have kind of just gotten comfortable with the fact that they're going to be around, and they're kind of going to be around forever. And in a recent interview with the head of the IRS, he said that the OVDP program will stay open at least through November. To me, that kind of indicates that there may be some considerations in closing this program down. And I don't know if that would just apply to the OVDPs or to the streamlined procedures as well, but I think that these programs have been out there in one fashion or another since 2009. And the IRS has made a lot of effort to raise awareness to U.S. taxpayers about the importance of disclosing the foreign income or assets. And I think we're starting to get to a point where it's going to be very difficult for people to argue that they didn't know that they were supposed to comply with these filing requirements in terms of reporting foreign income and assets. And once the IRS gets to the point where they don't believe that there's really any taxpayers out there that didn't know about these amnesty programs and didn't know about their requirements, then they're going to shut the programs down, because you should have got in while you had the chance. So I think it's very important that if you're one of the people that's kind of been on the fence as to what route to go to disclose your foreign income and assets and get back into compliance, now is a very good time to take action. So I hope that you've enjoyed this webinar, that you found it informational and helpful. We'll be posting it later to our YouTube channel, so you can go back and take a look at it if you want. Also, you should be able to download the PDF version of these slides from your GoToWebinar control panel. You can also type questions into your GoToWebinar control panel, and I will open it up for questions right now.